Good evening, ladies and gentlemen. Today is the 27th of May, and today was the monthly expiry. And generally, monthly expiries tend to be quite volatile. And today is relative to some of the older monthly expiries was not as volatile, but still was quite tricky, where it could have very easily been a stop out day. But that being the case, I think more or less till about 2 p.m. the market was smooth sailing except for the slight burst of short covering that we saw earlier in the day. And after that, we had quite a drastic dip and an even more drastic recovery. I think the way I managed today was once again a very risk off sort of a day. And I've gone over some major points in terms of what risk management means, what accepting risk means, how you should like mentally prepare yourself for a trade when you should take a loss. I've covered a lot of that during this video, and hopefully that's useful to you. I hope you all had a good expiry. I managed to return a little more than 4%, which is a very good expiry trade considering the um, kind of trading that I was doing. Also, I think something that will be useful is taking a look at how you can mitigate large moves after 2 o'clock or 3 o'clock that generally happen by sort of going over how exactly the adjustment is done. I hope you had a good trading day, and I will see you tomorrow. Thank you so much for watching. Have a great evening.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. We're about to settle in the pre-market, hasn't settled yet. Looks like a flat to positive opening, and this is on the back of US markets doing quite well yesterday. But right now, futures are slightly in the negative. Asian markets are also in the negative. We're opening more or less flat. At closing, there was about 100 points in the 15,300 straddle, and that gives us the range of 15,200 and 15,400. Since this is the monthly expiry, we might see some volatile moves and then invariably expire in the same range. So the idea will be to be slightly more risk off than what the at the money straddle is giving us. At the money straddle is giving 15,200, 15,400. We might want our range to be slightly larger than that, especially on the downside. Because the reason for that is a lot of shorts that were there at 15,300 eventually towards yesterday's close got covered. So it's not like there are huge shorts in the system that still have to be covered. So the upside might be limited. 15,400 should be the ceiling, whereas we might have certain dips towards 15,200, and that at least that's the hypothesis for today. And the trade plan will be to probably take the 15,150, 15,400 strangle at the open, and then see where we go from there. Okay, have just entered the position, and the idea is about 60% of the position is the 15,150 and 15,450 straddle, and about 30% of the position is 15,150, 15,400. I want to have only part of the calls at 15,400 because consensus would be not too much upside, which is why we might see some kind of upside. I don't want to have all of the 15,400 calls here and have them double uh, in a matter of 20, 30 points of up move, which is why this is the position that I'm going with. I'm quite comfortable with this range. I think more or less should not require much adjustment. We start heading to 15,250. The idea will be take all the 15,450 calls and move them to 15,400. And if we start heading to 15,350, then we'll take these 33% of calls that are here and move them higher, and that should keep us comfortable. The time is 9:22. The OI and its positioning for the day will become more apparent as we head towards 10 o'clock. Right now, more or less gapped up and slight down move towards 15,300 and Bank Nifty towards 34,600. Reliance is flat since yesterday, but IT is looking strong. Yesterday as well, IT was very strong. Today, IT is gapped up and continues to move higher. So, a lot of strength coming in from IT. Okay, so after the mild gap up, there's weakness in banks, but Bank Nifty should take support at 34,500. IT is rocketing, it's making a beeline upwards, probably being used to keep the Nifty at 15,300. Reliance more or less is flat, not much happening from there, and yeah, had moved down the calls at a point because this wasn't going to give us much value. Moved it down at a pretty decent price, 7.88. Once it became evident that not too much upside, also very visible that we have massive amount of calls being built up at 15,300 and higher levels. 15,400 now has an open interest of 60 lakh. So yeah, once that became apparent, moved them down. Now currently we're sitting on a credit of around 15 and our hedges have in them about 3 points. So about 12 points is what we can gain for a monthly expiry. I think 12 points should be all right, um, considering the kind of volatility that we've been seeing lately. So if our target is about 12 points, we can't afford to lose more than 10. Since it's an expiry, we'll have to work with something like that. Yeah, for now, holding on to that 15,300 range. We'll keep you posted. The time is 9:38. Yeah, also why are the hedges so close, and hedges being so close, the hedges themselves already are losing about 70,000. The reason the hedges are so close is because as the days goes on, I plan on moving closer to the spot. And why move the hedges later when I can have the hedges closer right off the bat? Also, just to add, I made a change yesterday after completing the YouTube video to the positional trade, and yeah, I posted about it here on Twitter. So in case you aren't following me on Twitter and you want to, you can follow me on Twitter. You can also follow Nifty BN, where we post a lot of data. As you'll see as the day goes, Ravi is going to keep posting different OI data as it builds up. So really useful stuff. And so yeah, just wanted to add that here. Okay, so here's another thing. So if you start looking at the option chain now where data should be more visible, we have got quite a large addition of calls today at 15,300, 15,350, and 15,400. I think between the three, there's almost 65 lakhs of addition. Yeah, so quite a large amount of addition at 15,300, 15,350, and 15,400. Much more than there is on the put side. But that being the case, now 15,300 is in the money, which should mean that the upside from here should be way less. But in case there starts to be some upside, could also start to getting a lot of those 25 lakh calls that have been added at 15,300 get covered quite quickly. Of course, there have been puts added as well, so people are taking short straddles. There have been puts, but not to the same extent that calls have been added. And something else that could invariably be tempting and probably be a good trade as well is put side maximum open interest is now at 15,200 with 70 lakh contracts. If you go from the ceiling logic, 15,200 most likely should be the ceiling, given that this is maximum put side open interest, and 15,500 should be the call side. But the issue is, this being monthly expiry, it will be very tricky. And all these puts that are built up are actually, so invariably, if there's a lot of interest at any particular strike, it acts as a double-edged sword. That is when certain positions getting unbound may trigger a move. So um, I will not be moving to the 15,200 put, to put it quite simply, because I'm going to play it safe and stay away from it. That will give me more of a reaction time in case there's a cascading down move. I will have enough time to react. And yeah, towards the end, towards the close of the market, if we are still holding the exact same range, because the 15,300 short straddle now has about 83 points in it. Yeah, so towards the end, if we start heading there, then I will uh, move closer anyway with the puts. So I'll keep that off the cards for now. I don't particularly have to be concerned about these calls until we start breaking basically the day's high, which will be around 15,030 is more or less where we opened. And if we do head to 15,030, these calls should probably expand to 10, 11. And these puts will probably give us at least 2 points. So we'll have enough of a reaction time to correct on the call side or take in additional trade from the put side. But we'll wait until that day's high criteria is met to take input credit. One side of looking at it is okay, if you move the put right away, you'll be getting 13 points. At that point, you might not even be getting 10. This will be trading at 10. You might not even get 10 on this. Yes, that's true. But if I move it right, but still, I will do it at a point when day's high is taken out at that point to risk manage, because if I try to preemptively risk manage my position and then my uh, fear doesn't come true, then the other side will hurt me. So the time is almost 10 o'clock. We are now finally sitting in 1 point of profit. Our hedges have also lost 1 point. So, um, yeah, still overall 2 points on the triangle and 1 point lost on the hedge. So far, market looking extremely sideways. It is a monthly expiry, so there will be certain things that happen with stocks because stock settlements will also be taking place. So have to keep an eye out on any potential price action. But yeah, IT continues to rocket. IT continues to go up. What will be tricky is if Bank Nifty and Reliance, which are both now trending down, start to participate with IT, and IT doesn't stop going up, then we might see some upside from there. Okay, here so we look at market biases. This is the 15,300 short straddle, which now is what 78 points. Now, here's the thing. This call is in the money by 8, 9 points and it's trading at 40, which means the time value given to it is hardly 30 points, even though it's in the money. This is an entire trading day. Which means people who are short this option and who are shorting this option are willing to short this option with just 30 points of risk coverage on the upside. Whereas the 15,300, which is out the money, is trading at 40 points. So clearly fear remains on the downside. You think of it from that perspective. Uh, the thing is, if we do head higher, right? Now this is where you will see that short covering kind of move. If let's say we make 15 points move higher, this will rocket phenomenally. More because of the kind of demand that will come in from people who have shorted this option. So um, yeah, see, we're heading higher on the spot, but not much of a change in the price. People are not yet covering their shorts at 15,300, which can mean one of two things always. The level gets defended, they're able to defend it, or these rocket out of control. So yeah, for now, still not a cue to do anything to the position. The position's doing all right. This call is slightly inflated, but yeah, that's fine. We're in line with the view of market that the upside should be limited beyond 15,300. We'll keep you posted. The idea will be to probably move part of the puts, maybe one third of the puts to 15,200 if this up move holds for the next 10 to 15 minutes, or if we don't cross 15,000. 330, which is the day's high, then I can wait to move the rest of them. I'm not going to be getting much for it at this point. I'm getting $9 for the 15,200, but that's fair enough. Uh, we've got a considerable amount of TK from the 15,150 anyway. So not a rush to do anything. We'll wait. Okay, IT stopped heading higher because Reliance and Bank Nifty started to make slight up move, and now IT is heading lower. So it's a balancing act situation going on, and also based on the pricing of the 15,300 call, which is in the money by 16 points, still trading at the same value at 42, tells you that people are not in a rush to cover the 15,300, and the upside from 15,300 should be limited. We're going to be very carefully observing the why mainly at 15,300 to ascertain what will happen on the rest of the market. Right now, this 65 lakh call here is in fact being added to. and uh, we're not seeing any reduction. So we're seeing an increase in 15,300 call and 15,300 put. We're not seeing any call unwinding as such. Yeah, the 15,300 put continues to have strengthened the entire day. You see this line cutting across all the way to the top. So yeah, market continues to keep that range bound from 15,300 view, and that's how options are being priced also. So yeah, for now, not a lot to do. We're just going to keep this as is. Right now, there's no fear on the downside. Uh, Fear on the upside is there, but we are just in line with the view of the market that the upside must be limited if this call, which is in the money, is trading for what it is. Okay, we're holding above 15,300 for a while now, and the calls are not exactly getting covered, but there's a lot of put writing, and 15,200 is the highest put side over in open interest overall. So, what probably the idea by the market also is that we put some value onto 15,400 call and short that. So 15,200, 15,400 are respectively maximum open interest. And to protect against some up move further, because now there's not much value left in the 15,150 put, I have moved about 33%. 25,000 out of 75,000 quantity, I have moved it. And just as I say that, we're now starting to head towards the day's high. So I've moved 33% of the puts to 15,200. And if we break the day's high, then we'll be moving another 33% and then the remaining to 15,200 put. Okay, so for whatever expiry related factors, Reliance is suddenly starting to build some kind of volumes and head higher. If it heads all the way till 2000, that might move us up to 15,350, and that is one thing to be concerned about and keep an eye out for. But at the same time, Bank Nifty is taking a very good dip to a quick 70-point dip that is being balanced by the Reliance up move. So that is keeping us tethered to 15,300. But yeah, that's kind of what you need to be on the lookout for. Which side is making what kind of move? For now, not too much concern because Bank Nifty and Reliance are balancing each other out. So we continue to hold the same. Okay, we're making repeat attempts to the day's high, and this means I need to take on more side credit. Okay, so currently we're sitting on a market of 3 points gain, and we're now breaking the day's high, which might be of a concern. And the current triangle that we're sitting on, the 200 point triangle, where the calls are just 70 points away from the money, is trading at 15. And what I will have to do is, in case we have a continued up move, I'll probably have to move the puts up further to 15,250. But overall, um, from where we are currently, cannot take more than a 10-point loss. That has to be the idea. We'll also see what's happening on the Y front. There should finally be an ending of the 15,300 call, as is evident. I don't want to rush into adjusting for the upside because there's no need to at this point. 15,400 should act as a very strong resistance. Uh, yeah, since morning about overall all put together about 5 lakhs of unwinding at the 15,300 call. But yeah, no need to be in a rush. I'm comfortable with this position for now. Not too particularly concerned with the upside. Even if we have some kind of big short covering, which is what basically Reliance is making this apparent attempt to head to 2000. I'm not even sure what the idea here is, but even if Reliance does head to 2000, should not be too much of a problem as long as Bank Nifty stays below today's high. So if Bank Nifty doesn't like head above 14,700, that range, then upside is not too much of a concern. So regardless, we're sitting on good gains, and the idea will be to keep protecting what we've already captured and add to it as and when we can. We'll not sit on too much of a directional skew at any point. Okay, that big short covering move came through Bank Nifty, making a massive green candle. And yeah, I've moved up all the puts to 15,250, and yeah, the calls remain at 15,400. You're taking this additional credit because these calls now only 60 points away from the money. Can't afford to sit on them and expand into oblivion. And basically now what will happen is dips will be used to cover existing shorts. So that's why dips towards 15,300 should get bought. And yeah, the next move will probably be in case we start heading and holding above 15,050, we'll have to move at least part of the calls to 15,300 uh, in order to balance the expansion on the part of the puts to 15,300 to balance the expansion on the 15,400 calls. So no need to rush into it. We've just made an up move. So for now, all good to just keep the position as is. Our range is down to 150 points, and we're definitely having a view that 15,400 should hold. Let's see what kind of unwinding took place. There would definitely be 15,300 unwinding in this process of the up move. Yeah, so a considerable amount, but 15,400 has 70 lakh OI, so not going to be an easy breach. Of course, in the panic up move, these will gain as they did also. So you can see, yeah, I think in a matter of a minute, not even, went from 7.5 to 13. So fair enough, we get to take an additional credit, but the view holds good for now, and this is why I prefer straddling over straddling. It gives me more reaction time. Okay, so since morning you can see steady increase of this 15,300 put. So the largest gainer in terms of overall OI gained from beginning of the morning till now. 15,200 put, obviously, and right now no value, so you're not seeing addition. You're actually seeing people this go down because people are booking profit on 15,200 put and moving it up to 15,300. In that up move, massive sudden unwinding of the 15,300 call, but the 15,400 call still holds strong. So still, I mean, a little bit of unwinding, but not too much. Now, this is starting to become a problem due to fear that this call is starting to gain quite a bit. I will wait till this call expands till about 15, 16 even, and then take corrective action from the put side. I'll not rush into correcting this because there is a panic sort of a buying back of call options. What I might do is move about 1/3 of the 15,250 puts to 15,300 to give me a little more buffer while we head on the upside. Okay, had moved up about less than 30% of the puts to 15,300 to protect against further expansion of these calls since they're opted to 15.5. And yeah, that's fine. This is a protection sort of a move, and in case we once again fall back and head back towards 15,300, more or less these will start expanding. I will shift them back down. That's all, not a lot. Or I might even move 30% of these calls down, but for now these are here as a protective gesture against the expansion of these calls. Keep you posted. Time is 11:40, and definitely that upside move would have caught off a lot of people who were on this 15,300 short strangle. So people who were on this, it had gone down almost till about 70, I think 72 cents, 3 something like that, and now has completely expanded to 86 again. People who did in the morning will still be at break even. Okay, so we are holding firmly above 15,350, and we're seeing put writing pick up at 15,350. We're put writing all the way till 15,500 actually speaking. And yeah, I've moved up puts to 15,300 based on the fact that 15,300 is now the second highest open interest after 15,200, and I need the put side credit in order to be able to deal with further expansion of this call, if any. Now, what is going to happen is beyond this, my plan will be to start taking off call side risk. So I will be squaring off um, the 15400 call and moving it to 15450. So that will be the only good option left on the table in terms of an adjustment. Otherwise, we'll be heading to a straddle position, and I don't want to be on a straddle position this early on expiry. We've still got half the day to go, but it's all right. We're still in the positive, and we're sitting on almost 28, 29 points of credit. So that gives us 15,720 on the downside and 15,430 on the upside. And yeah, it's a pretty decent range. And not seeing too much of an unwinding of the 15,400 call. There is some amount, definitely, but not substantial, because I think at higher prices, people will also feel um, attracted to sell the 15,400 call because you're getting better prices. So we'll have to see what happens in Bank Nifty. Bank Nifty is now above 34,800. We'll have to see some kind of spike move will get it all the way to 35,000. Could also be a bait and switch type scenario. Reliance as well, that unrelenting up move has pushed it quite high. Now the idea is, will people start thinking 2000 is taken out, or is this to protect the puts that have been sold at 2000? All of that we'll find out later. I'm still not seeing too much of an upside threat, which is why I continue to hold these 15,400 calls for now. But basically, if they start expanding, these expand to something like 18, 19. At that point, I'll have to take off at least one third the quantity and switch it to 15,450. Right now, I'm getting 4 points for it. There's no point switching now, because in case there's an up move along with these, this will also expand. That's there. So why switch now? You can wait. Also, if you see that I keep cutting the short quantity, that's because as I increase the distance from my hedges, these will require more margin, and that's why I need to do that. Also, while I'm only talking about the upside adjustments, the potential adjustment for a reversal will be to quickly get out of the 15,300 put and move it down to the 15,250 or 200. That is going to be the side adjustment. I'm not going to bother with rolling down the calls at this point. In case we do have a down move and these start expanding to 17, 18 or so. Actually, 17, 18 on the put side is fine. If start expanding over 20, then I'll have to take corrective action on the put side. Okay, Bank Nifty finally facing some resistance around yesterday's highs, and 34,800 acting as a resistance for Bank Nifty. Most of this upside has come from Bank Nifty. So that being the case, we're now finally seeing some of the call prices start to normalize. The strangle overall that we are in has actually lost because of the call side fear that had spiked up, which is now starting to come down. But it's also leading to these puts starting to expand. So the idea will be, we will wait and see if they expand to around 19, 20, and at that point we'll square that off and move it to the 15 to 50 put. Bank Nifty also most likely to take support around 34,700. So don't want to be in a rush to move down these puts and then have a 10-point reversal, which will again expand them. The 15,350 short straddle is trading for something like 62, 63. So it's not pricing in too much downside. That should be of a concern at this point, since the money put is trading at 25 points of extrinsic value. The reason not getting spooked out of the puts too early is because there's 80 lakh of put side open interest at 15,300. Now a lot of people have built this position, and they're not just going to let a quick downslide pull it below. It's very, very, very unlikely. But at the same time, yeah, the same logic holds up. The same long and winding can cascade out of control. But for now, based on the premiums, the prices have not gotten out of control. You'll know once the prices start getting out of control, once the buys to the downside and the adjacency to the downside starts to build, yes, of course you will lose in that process because you're exiting that position at a worse time. But at the same time, it also gives you the cue that should not be in a rush to risk off on it, um, as long as certain criteria. So continued down move. I'm expecting this dip towards 15300 to get bought eventually, but I cannot sit on calls that have the threat of becoming at the money in 35 minutes, so in 35 points. So I can't keep all my puts at 15300. I have moved about 20,000 out of 64,000. I've moved it down to 15250, and it's because these were starting to expand over 19. Might as well risk off because whatever expansion has happened on the calls now, that all of that has deflated. So no need to be overly risk heavy on the short put side. The idea will be if these continue to expand once again above 20, I will move another 20,000 quantity down, and about 22, then all of it down. So we'll keep you posted. Time is 12:30. Got 3 hours left to go for averaging, and so far the market has just given us this, that there is 78 lakh of open interest at 15,300 and 80 lakh of open interest at 15,500, but we can ignore that and look at 77 lakh at 15,400, most likely range 15,300 to 15,400 for expiry. And in line with that is our position, except that each time we're bleeding on a side, we're having to risk manage it. It might expire in this range, but might also dip till 15,300 before it does that. And if it dips to 15,300, then this put is going to expand to exactly like 34, 35, more or less, at least till 30 becomes at the money. So yes, risking off from here to here, did it mean I gained just 2 points instead of the 3 points I would have gained here? Yes, that's what it meant. But at the same time, it meant that in case there was a further down move, I would not have lost what 5 points this would have lost, and maybe lost three. So reduce the risk in the direction of the move. Okay, I'm doing moving down about 60% of all the puts to 10 to 50 because we're now seeing a down move and there is not too much value in the 15,400 calls to be able to protect. So yeah, about 60% now of the puts are at 15,250 and 40% at 15,300 and 100% of the calls at 15,400. The reason I had to do that is it's more or less protecting mark to market, because let's assume we lose 20 points from here, these are going to explode to 25 and 20 plus, whereas these calls will not be able to protect me. So yeah, 60% of the puts move down. Now in case we start heading up again, this starts heading to 9 and 10, this by then would also be at 6, and since we have part of our risk on the higher side, um, with the 15,300 puts, these will also fall till about 13, and that should balance. So it's an act of basically protecting mark to market. Okay, so what's happening now is 15,400 is, after slight unwinding during the up move, is now heading back up. So 15,300 and 15,400 have almost exactly the same amount of open interest of 80 lakh, and right now the 15,400 is not the one at risk. So 15,300, I've gotten rid of all of it and moved it all down to 15,250. The reason for this is it while there is very high probability that 15,300 holds, I'm just not completely comfortable with the given amount of time to go to potentially deal with a further dip and then a reversal, because then I'll have to move the calls down to 15,350, and on reversal they might start to bleed. So rather than taking risk on and sitting on a high risk spread, I've just risked off, and it's fine. So I would have gained an additional few points from here. That's fine if I have to give it up, provided that I'm at least able to stay in the position and manage it through the day. Because if I'm sitting on these and we're at 1530 and we make a 20-point down move, which is basically Bank Nifty heading to 34,700, that'll make that 20-point down move, and these puts will really explode. So I'll have to sit on that market loss, and I don't want to do that. So yeah, otherwise data is suggesting very strong go ahead for 15200, 15300. Regardless, we've got a long time to go, and towards the end, I will anyway be moving in uh, as close to the spot as possible. We're looking at Bank Nifty open interest. Bank Nifty continues to head higher. I don't see 35,000 being spooked out, especially not when HDFC Bank is not strong. On a monthly expiry, it will be very, very um, unlikely that 35,000 gets taken out. But there's always the threat of short covering from this kind of OI that's sitting here at 35,000 on the Bank Nifty. Our position is doing all right. Bank Nifty is just 70 points away from 35,000. And even if Bank Nifty has to 35,000, that still doesn't push us to 15,400, given everything else. And despite this steady up move from here, actually seeing addition, higher value of 15,400, seeing addition of 15,400 open interest. So while it might be tempting, the idea of, okay, let's move the puts back up, is just not required at this point. The threat of these exploding is not very high. It looks different now because it's come back to 7.5. This was at 11 like a minute ago. Yeah, it's 10.89. So it was starting to expand because of the up move on Bank Nifty, but I think it's very unlikely, probability-wise speaking, that we get pushed into that short covering up move. So we continue to drill in the stop loss. For now, this triangle is trading at 14, and yeah, I'll keep you posted. We've got 1 hour 43 minutes for averaging to start. 150 point range with good 14 points in it. Okay, Bank Nifty is at 35,000, but Reliance is making some good red candles. So it's kind of balancing it on the Nifty, even with Bank Nifty at 35,000. It's still nowhere near 15,400, but that will spook people out and get them to cover their 15,400 shots. Because when you're covering, you're scared how quickly people start buying futures, start buying cash in order to cover their positions into settlement. Then yeah, the fear will expand these also. That's what is called the gamma effect. We're sitting on a good profit now, and this triangle currently has 11 points, a little more than 11 points. Idea will be to lock in as much as we can. So if we start seeing some kind of a up move, yeah, Bank Nifty just climbed all the way up there, touched 35,000, and now is dipping. Now the question is, will it break convincingly or not? With HDFC not supporting, I'm not too convinced on the up move, which is why even when these calls started to expand, um, not risking off on them, and certainly I'm not going to move the puts back up to 15,300. That is completely off the cards now, because it's just a bad move at this point, given we still have 1 hour 24 minutes to go for averaging. The adjustment will be, if we do make that up move, I will start cutting the 15,400 call, moving it to 15,450. Why am I doing this? I'm doing this partly because uh, the thing is, so many longs are built up and we test a pivotal level, and then if that rejects, then we can also see an equally large dip, and I don't want to get in the way of that dip. For example, right now Bank Nifty got rejected and yeah, led to the dip. So currently the 15,350 at the money straddle has 26 points in it. So anyone looking at this, anybody in the world, even who doesn't know anything about options and open interest, will tell you that there's something going on here. So naturally, this is the most likely expiry spot. But at the same time, you can see that 15,300 huge put open interest, 15,000. So that was today's change, but 15,400 huge call open interest. Now, why am I not like the previous videos from months ago when I used to be at the money short straddle in the last 1 hour? Why am I not doing that? Let us say this short straddle is trading at 46, and let us assume I can capture out of this 46 30 points. Now, if I'm going to capture 30 points, if my targeted goal is 30 points target, then I need to be able to willing to risk 20 points. And what has happened is, ever since I've increased my sizing for a while, until I am very, very, very comfortable with the sizing. And also until I know that I've returned enough money on the capital, wherein one bad day of, let us say, instead of 20 points, because of whatever slippage, it exceeds to 30, 40, or even 50 points, then it doesn't affect me. It doesn't spoil my confidence. It doesn't change the way I trade and make me take bad trades. Then I will start taking higher risk spreads. If you notice this entire month, I've been very risk off. Even if you watch the video till here, which most people don't, you'll see that at different points we were just taking off risk in the direction where we were bleeding. We were not trying to maximize the point return. We are not trying to, take advantage of an IV spike and benefit from the reversal of that spike. We're not doing any of that. We are just trying to capture whatever we can in between, right? So realistically, if I want to go for this, um, 30 points, I need to be willing to risk 20 points. And currently, I am not willing to risk 20 points. If you saw at the beginning, the idea for the day itself was to capture about 15 to a maximum of 20 points. And the risk that we were willing to take was 10 points. Now, a lot of people think that they understand risk and they take risk. But how to estimate if you're actually understanding the risk or not understanding the risk is, if you take that maximum loss that you had risked and accepted, and you then feel shaken by it when you book that loss, you feel bad about it, you think about it, the next day you wake up and like you're not able to trade your own way because your confidence is taken hit, then you have not accepted the risk. We all like to think that and nobody's perfect at this. Everyone does feel obviously emotionally strained when something goes against them, but the attempt should always be, how do I accept the risk that I'm taking? Because a fallacy is that there are some ways of trading in which you will never make a loss. And I don't think there's a single trader in the world who doesn't make losses. The thing is, the people who survive know when to cut losses, and that's what keeps them alive. In fact, just throw this in there. I think there are probably three exits that I have taken across my trading career, which I know for a fact had I not taken when I did. Three that I'm able to remember now. If I had not taken the exit, then I probably would not have been able to come back and trade the next day. That's the kind of damage it would have done. So getting out is important when you have to. So yeah, we're into the last 1 hour, 53 minutes to go for averaging, and holding the same range. This is working out nicely. There's about a little more than 7 points a little more than 8 points in the triangle, and our hedges have 1 point, so about 7 points that we can capture. We'll try to get all of this, and unless we need to risk off at any point, that we'll do that as well. But basically from here, I'm not willing to give up more than about 4 points. 4 points I'm realistically willing to give up. Now if I have 8.5 points that I'm sitting on, potentially 7 that I can take home, and I'm willing to give up 4 points, and it will not exactly, a lot of people like, okay, you were in profit, why didn't you book it? Then by that logic, if you didn't trade, you would never had a loss itself, right? So right now I'm willing to give up 4 points in case something happens before getting out of this position. And towards the end, if the view continues to hold good, then we can look at options such as moving this 15,250 put to 15,300, and also consider, depending on how the spot is positioned, moving the 15,400 to 15,350. This is more or less the analogy into the last 1 hour. We'll keep you posted. Okay, risking off on the put side because seeing a down move and I don't want to get in the way of that. Do it with more or less 60% of the quantity has been risked off, and that's fine. I'll keep it here for now. I'm looking at what is the 15,350 call trading at. Might be too early to roll it down also. Too early to roll it down. For now, this structure is fine. What I'm afraid of particularly is some kind of massive unwinding because of the kind of longs that have been built up from 15,300. Yeah, give up a lot of potential gain, but better to risk off than to sit and watch these go to double digits. So it's okay. I bought them back at around 8 and sold the 200 for 3.4, all in the same price range. Okay, I'm going to risk off all of them because I just don't want to have to deal with this. Okay, one more thing will be rolling down the call to 15,350. It's too early to do it. We haven't even broken 15,300. might be a bounce from 15300. So that being the case, this is fine. We'll leave this at 15200 and also change the panic buy settings 15200. Okay, we'll move down some of the calls. Yeah, this is fine for now. This order is just in case I need to further get out of this, which doesn't seem to be the case. That's fine. We have 100 points from the put side, and we have 50 points with part of our calls and 100 points with the rest of our calls. That's fine. We'll let this bleed till 12. If there is a continued up move, we don't mind letting this bleed till 12. Okay, good. So 15300 is acting as a support, as one would think, and the kind of open interest built up, which vanished in a matter of minutes. That's why you saw the kind of put side spike. Uh, yeah, it vanished. People who couldn't, who didn't hold on, rather, nothing wrong if you didn't hold on, exited, and yeah, now we're seeing the cool off. See, this is the thing. The range might end perfectly out of the money, but the question is, will you be able to hold on? And also, if you do hold on and your view goes wrong, then what? These calls, 15350 calls, I don't mind expanding till about 1213 until it becomes obvious that the dip is getting bought. And at that point, I'll square this off and move them up here. Yeah, this is a monthly expiry. You never know what to expect. Okay, so at this point, risk reward is more important than open interest, but just to show you what is happening, you can see this 15400 call unwinding is because there's 1 rupee left in it. Nobody particularly wants that. But you see here, these two middle lines, you can see 15350 and 15300 call heading up. So we're now seeing call writing pick up at 15350 and 15300 into the last uh, few minutes, last 32 minutes before averaging. So our position is quite comfortable. We have 100 points on the downside and 100 points on the upside with our main position. And yes, we have a little bit of our calls lower, but that's because potential shakeout. I mean, even if you look at it, we have 70,000 puts trading at 3 and our 54,000 puts are trading at 1.5. So you can take the weighted average of these two. In fact, I should increase the quantity of calls at 15350 to give me a little more balance. But for now, I'm going to wait till we hold below 15300 or we have some kind of a runaway move. Start having a runaway move, I have to get out of these puts as well. So that is um, necessary at this point. Okay, had to move down all of the calls to 15350 because now there's no value left in the 15400. And yeah, for now I'm just going to hold this position. We are now really dipping, and that will start to become a problem. We are at the day's low. We are breaking all the price action that I can see. Below 15 to 80 is quite dangerous. So more or less from here, it's a stop loss and exit logic. I will be exiting the entire position. This is currently trading at 250, no, sorry, 650, and at 8 I cut the entire position. Regardless of which way it goes, at 8 the entire position will have to be cut. Now I'm more concerned with what's happening with the 15300 short straddle people who are on the 15300. So this 15300 put is not really pricing in too much further downside. It is 20 24 points in the money, trading at 34, 10 points of time value has been attributed to it. So that should give you some kind of confidence for the 15200. Regardless, the stop loss is the stop loss, and we'll have to watch now and see if it gets hit. We'll keep you posted. 25 minutes to go for averaging. I don't think we break 15200. In fact, I think we close above 15300 today. That would be my. I mean, if I were to pick a side, I would say we would close above 15300 or at 15300. this kind of a move will be to get a lot of people out of their positions, which it would have completely accomplished. Okay, we'll have to now move part of the puts to 15,250 because we are now seeing a big up move that is pulling us back above 15,300. And yeah, if this continues, then these calls can give us a problem. So I have to move the puts up. It's been an annoying few expiries, these last minute jitters. The same logic, still trailing 2 points with 15 minutes to go for averaging. Okay, 10 minutes to go for averaging, and what it looks like is potentially a 15,300 perfect finish kind of a situation. Now, Strangle itself is trading at 6 rupees, close to slightly under now. Man, I'll be exiting either of these legs if either of them expand to like 5.5, 6. And what I'll do is, for example, if I square off the 15,250 put, then I'll sell the 15,200 put. I might even roll down the call to 15,300 and vice versa for the other side. We'll keep you posted. 10 minutes to go for averaging, and I think into averaging we might have like moves which are plus minus 15 from 15,300 before settling at 15,300. Okay, 4 minutes to go for averaging. This triangle doesn't have much left. 4 points. Now, one of two things will happen as soon as we hit 3 o'clock. We'll immediately see out of these 4 points, 3.5 points wiped out instantly if we don't make a move. Right now, if you see the at the money straddle is trading at 25, right? It'll either slowly bleed and go to zero because the expiry will be plus minus 15,300, or we might see a quick move. And the idea is, if in case there's a quick move, get out of the position as quickly as possible, and if possible, try to take additional credit from the winning side. But this 30 entire minutes of averaging, so we'll have to be a little careful about doing that. I didn't trade last expiry, but the expiry before that I gave up quite a bit because of doing some last minute shenanigans. But anyway, for now this is comfortable. Okay, the time is 3 o'clock and we have not seen any immediate move. Now that'll mean that this 15,300 call input will slowly start to bleed. One of them has to go to zero. But there seems to be a slight up move, which is getting a lot of people who have shorted the 15,300 call to buy it back. Now, a lot of people will ask what is averaging, how averaging works. So I'll just answer it right here. Basically, in the last 30 minutes of the expiry, the price of the Nifty is not what it closes at, but rather at what the average over those 30 minutes is. So right now, even though this call is expanding because people are starting to cover, I don't have to be concerned because the average price of Nifty after the entire averaging period at is done needs to be over 15,350 for this call to be worth something. Now, one more thing I can do if this starts heading to 4.5 is move up the puts to 15,300, which at this point is starting to look has a very high probability of ending out of the money. Okay, what I'm doing is moving up the puts to 15,300 and not squaring off the 15,350 calls because they still have a very low likelihood of being in the money. Purchased one extra set of that in order to let me move up. So now the 15,300, 15,350 strangle is trading at, how much is this now? Okay, so 360 roughly, and we'll set a stop loss of 5. Yeah, massive green candle to pull us over that maximum put side open interest. Yeah, it is very unlikely. We've already spent 3 minutes below 15,350. For this to have much value towards the end will be very unlikely, but as long as the possibility exists, there will be some value to this. Huge green candles towards the end. Might as well exit this now. This won't put my margin in negative. I just had a little extra uh, on the put side because it wasn't letting me move my position. Bank Nifty over 35,000. Wow, that would have been a hell of a spook for anyone who was too close. But yeah, firmly below 15. We're 20 points away from 15,350, so I don't have to worry about this exploding. Meanwhile, I will have my stop loss orders ready for this. Okay, most likely that the average puts these two at 0, and they're trading at 2 rupees now, so 4 rupees can be the stop loss, and that's how you kind of just trail in your stop loss towards the end. And basically, the only way these two will have any value is if there is such a large move above 15,350 or below 15,300 that the average of Nifty starting from 3 o'clock to 3:30 has to be above. It's very unlikely. Even if you go to that level, it doesn't matter. Even if you go above that level, it doesn't matter. It doesn't matter if in the last minute there's a 100-point up move. It's not going to do anything to the options. We'll keep you posted. 25 minutes to go. Potentially, our hedges will lose about 50 to 60 paisa, and our trade should give us about 2 rupees 20 paisa. Okay, now it's almost certain. It's just close to impossible. We need a 100-point move to put either of these two in the money. So I have to make one change. Yesterday I tweeted and moved up the put side from 14,900 to 15,000 on the uh, double diagonal ratio. And today what I'm going to do is I'm going to move this to 15,100. Of course, move the hedge also. So effectively between this and this, booking about 30,000 of profit. Yesterday I had booked about 40,000. And even technically what should be losing leg of this is actually making about 55,000. So, but to balance it a little more, we'll be moving up. I think I'll already set it up. Yeah, I need to do it from here and not from Tiroda because I have to place the same order many times. So yeah, just buying back the 15,000 put, selling the 15,100 put, both in 3rd June expiry, buying back the selling the 14,900 hedge, and buying the 15,000 hedge, both June month end expiry. Okay, should be done. So yeah, between the two, about 31,000 profit booked and new leg entered. There's still about 12 minutes till we get auto squared off by Zerodha. Only on Thursdays I will let Zerodha auto square me off because even 5 paisa of decay. So out of what is remaining here is there is 65 paisa. 5 paisa of decay, if you do the math, is worth more than the charges that will be charged for auto square off. Okay, so we see an even more continued up move and now heading to 15,350. 15,350 call is 40 paisa. I have no intention of losing money on a 40 paisa call, but the average of Nifty currently is 15,336, right? So 15,336 is the average of Nifty at this point. Now for the average to get pushed over 15,350 will be almost impossible. Like for example, 20 minutes have been spent below 15,350 and the average is 15,337. In the 10 minutes it has to go all the way up to 15,380 maybe. Like you see 2 into 3 will be applied to this because 20 minutes is over. In the 10 minutes it has to spend double the time above 15,350 as what it did below, as in with double the value of difference. It's almost impossible. Almost, but not quite impossible. Right now, this is trading at 70 paisa. If I mean these two together, if this expands to 1 rupee 40 paisa, I'll just take the exit at 1 rupee 40 paisa. Otherwise, the 80 paisa is something I still want. It'll more than cover my charges for the day. I'll keep you posted. Still 5 minutes till I get auto squared off. Either I get auto squared off at whatever value it gives me, or I stop loss myself at 1 rupee 40 paisa. One of the two. It's just this is whoever is buying this is not able to calculate and do the math in terms of how much of a further up move we need to make for this to actually have some value. To pull this average up by 10 is not going to be an easy task. Okay, looks like that should be my Q. Not yet, not yet. My stop loss isn't hitting yet, so I'm gonna wait. Even if we touch 15,350, it doesn't matter to me. I need the stop loss to hit. Anyway, for change, but yeah, when the odds are heavily in your favor, why not take it? Also, whoever sold this bank nifty 35,000 call and held on to it, it will really be hitting themselves, because it went all the way down till I think at one point 4 rupees or something. Yeah, 4 rupees. Before then, multiplying. Should be getting auto squared off soon enough. Our orders are getting placed to auto square off, and of course some validation pending. Looks like we bought the spread back for about 25 pies, which is good. It's as good as it gets. 25 pies, considering one of them technically you can say is looking like it's at the money, but it's actually nowhere close to being at the money. Um, yeah, and our hedges also got sold, so that's a good thing. And finally, looks like we are ending the day with 4%, a little bit more than 4% for return, which is a very good return for an expiry trade. I think overall the expiry itself should have been all right. The only thing would have been to mitigate the last move that we saw after 2 o'clock. If you were able to not get hurt by that, it would have been all right. But otherwise, it could have been tricky, especially if you had stop loss market orders. They probably got hit on both sides very, very easily. And yeah, many people will ask about the margin. So the margin available is 3 crores, out of which I always keep about 20 lakhs of margin available in case I need to make any changes. So out of 3 crores, um, so yeah, a little better than 4% return. I have these open positions which take up some of my margin. So this takes up about 57 lakhs. Thank you so much for watching. I hope you had a good expiry, and I will catch you tomorrow. Okay, just to add, look at the spot because of the kind of ridiculous move that put us 15,380. But if you see the 15,350 call is not having any of it, it cannot be worth any money. No matter what you do, this has to be worth zero because the average is far too below 15,350. And yeah, there's no way this ends with any kind of value because it's just one minute left and it's impossible. You need a 500 point up move from here on the Nifty, and then it's possible that this has some chance of ending in the money. No chance for that.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.